Welcome back. Let's take a look at how the markets have performed now. Certainly has been a red day across most of the Asian market, unfortunately. Almost 2% loss then in the Shanghai Composite, in fact, out in China. So big losses on that front there. The economic news perhaps not settling in too well for that market picture. More than 1% lost out in Japan, with 2/3% weaker than for the Hang Seng out then in Hong Kong. But that negativity did not filter through to Europe, who's gone completely higher today. 0.5% to the good then for the FTSE 100 out in London, with the DAX in Germany going up 0.8%, 0.25% higher than for the CAC 40 out in France, still sitting just below that 5,000 point mark. On the local front, we're enjoying some positivity, even if it is minute though. 0.3% to the good then for the JSE All Share. The banking counters have gone up more than 4.33%, so some good numbers here. This is despite, of course, the absolute hammering that all these shares have received over the last while. So, of course, COVID-19, credit impairment, bad debt, and of course putting out as much money as possible for loans and the like has certainly hurt the banking counters. Lower interest rates does mean that they make a little bit less with regards to profits as well, but consumers perhaps trying to get back into that market picture, and investors seeing that growth for the future as well then means that they get back into that counter there, so which means that the financials overall are headed high as well. 2.5% to the good there. Also, in terms of positivity, the industrials enjoying what is a relatively good day on that front, rising up similar mark by the All Share itself. But it's not a good day, however, for resources. As you can tell, going down 2/3%. The biggest loser thus far is the gold mining shares, 1.5% weaker, with 0.5% weaker as well for the platinum miners. South African property stocks pretty much flat with a slightly negative bias. In terms of stocks themselves that have gone higher today, 9.7% up for City Lodge. Of course, those gains up on the All Share Index. ShopRite also enjoying some good numbers at 139 Rand for a share. This comes after, of course, yesterday they came out with their earnings, record sales numbers, plus a 16.6% revenue, or rather earnings figure, which seemingly increased on that front. Plus, they're taking themselves out of Kenya, which one would have thought is a much more lucrative market. They have 2 stores left out in Kenya, and they will be closing those, which means that they are beginning to wind down a little bit of their African operations. How much of that they'll wind down is perhaps the big question at play over here. But today, they've gone up 8.33%. In terms of retailers, Massmart also going up more than 8%. So too is Truworths, 8.3% to the good, sitting at 34 Rand and 62 cents a share there. But in terms of stocks that have gone down, the likes of Hammerson have gone down, Hospitality being so too has Steinhoff then, more than 5% down across all of those. Onto the commodities board then. Slightly better picture for Brent crude, but it is still down below $40 a barrel. Massive concerns then, as the price then of Brent crude is now up 0.4%, but yesterday had faltered through and had weakened quite substantially. Saudi Arabia playing its mark there on that front. Because of the issues of supply, they've of course lowered the price for their oil to the supply that they've put out to Asia. Now, if they lower the amount that the Asians are paying for oil, it just means that the general market picture will look at it and think, well, perhaps oil should be a little bit lower, and the price has gone down even below $40 a barrel. Of course, it is a far cry from the near negative figures we were seeing even in WTI, which is the West Texas Intermediate, or oil out of the United States. So still an interesting picture on that front, now just hitting that $40 a barrel mark. $901 a fine ounce then for platinum as well, pretty much flat today, while down goes the gold price, $1,922 a fine ounce there. Onto your currencies, 1675, a slightly better picture. We were headed towards 17 Rand yesterday when it comes to the local currency against the greenback. We're now 0.8% better off, and now sitting at 16 Rand and 75 cents. We're better as well against the euro, 19 Rand 70 odd. We're more than 1.2% to the good on that front, and against the pound, we're 1.5% to the good, 21 Rand 63 against the US, against the British pound, should I say. Makwe Masilela does join us now. He's from Makwe Fund Managers and joins us to unpack this market picture a little bit more. Makwe, thank you so much for the time. So we're still seemingly looking at a picture across the globe where we worry about this oil price. I mean, dipping below $40 a barrel. It's not a figure we've seen since at least June, and one would have thought those days are over, but clearly they're not.
Definitely, but that's very good news for us as South Africans, because we like to see oil going a little bit lower, as we know that we're a net importer. But I think for the fact that we've seen that summer is coming to an end, the driving season is coming to an end in the US, so we don't expect the demand to start picking up. And anyway, for the past 3 or 4 months, we've seen demand has been struggling. Every time you see a rise when it comes to the new infections, then people start to think that the economy will continue to slow down, meaning the easing of the lockdowns might not be fast-tracked as we initially thought. So it's a question of global economic recovery, and if there's no decent global economic recovery, and as we've seen from the GDP numbers that came out of Japan yesterday, Europe as well, back home here, that things are not looking that rosy, that we might be having a very long way to go before we get out of the woods. That continues to impact on oil prices.
Yeah, it certainly does. And then you have a rand-dollar exchange rate, which now is at 16 rand 75. Look, I suppose it is still within range, but how important and significant is it that we stay below that 17 rand mark at this stage?
Very critical, because as a country, we are a net importer, and as you will know, that the minute you see the dollar strengthening, then that will make commodities priced in dollars, like your Brent crude, your gold, as well, to be more expensive for other people to be able to afford. So for us as a net importer, as a country, it's very significant that we stay below that, and more importantly, stay below that and also be able to be constant, because we don't want a very volatile currency at the very same time, because that hampers your planning going forward. It means that every time you do a transaction, you have to continue to hedge against any moves either way, and that can become a very expensive exercise in the long run.
We also saw business confidence head a little bit higher as well, but still does remain in low levels. It's much the same as consumer confidence. And of course, we got that GDP number, that fateful GDP number that came out as well. How dire is South Africa's situation? I mean, can we fix it in the short term at the very least to get our economy back to some positive growth numbers of sorts?
No ways. There's no way we can fix it in the very short term. And as you are right, I mean, the business confidence in line with what we saw on Monday when it comes to consumer confidence, still at low levels, but there was some improvement. And that's an indication, that as business we've been trying to open up, because you check the business confidence, the period that was taken, it was, I think, between the 11th of August up until 31st of August. So it makes sense. That's when most economies or most sectors were starting to operate. But as a country, I don't think we can even think of trying to get back to positive numbers now. Remember, this is the fourth quarter that we've seen our economy going down, and I don't understand why we're making the noise now, because now it's understandable, because we know that the whole 3 months, basically, the global economy was not working. But with us, our problem started when we were first getting into negative territories. And I think that's when we should have made the right noise. That's when we should have started talking about fixing the economy. Then we had another quarter again going down. Then you also got to a point where you were downgraded. Still nothing was done. So I don't think it's necessary to be making that noise, because this problem has been with us forever. So this whole thing of COVID-19 is just highlighting what we've been going through as a country, and please, we know what needs to be done. Why are we not doing it? It's very difficult to tell, but yes, as a country, you don't even have to start thinking about going to the pre-pandemic levels, because those levels were negative anyway.
Yeah. Okay, let's get into some equity news then at the very least. Growth Point withholding a dividend, rising arrears. It's not just a problem that they're facing, it's a problem that the property counters are certainly struggling with at this time. Can things get better for Growth Point and all the other property companies?
Definitely it can, because they've got a very diversified portfolio. Remember, they've got some offices as well and some industrials, and chances are industrials will pick up going forward. Here you are talking when companies start doing serious logistics, warehouses, stuff like that. And yes, it's not surprising to see that their profits were down by 49%. Anyway, the guys are on us 2 months back. And also for them, their dividends going down by almost 51.4%. And also remember, the guys also had to have an issue to have their relief plan when it comes to their tenants, so that they can just get some relief as well. And as you said earlier, the question of they've got areas of come to rentals, and more importantly, the uncertainty about this COVID-19 impact going forward. So they have to do what they need to do to try to preserve cash. But historically, we know that this is a company that used to pay 100% of their distributable income per share. So now we know that when things are okay, then definitely they pay out perfectly so. And I think as a shareholder, you should be happy that if they continue to pay you the money that they don't have, at a later point, they'll come back to you value to do rights issue to try to raise more cash, as the company will probably be suffering financially.
Suffering financially, though, does mean that, we are getting word even out of bond, Better Bond, that is, which owns a third of the house price market, that perhaps people are getting back into buying houses, and perhaps even better than pre-COVID-19 levels because of lower interest rates. Is that something that could also help Growth Point at a later stage?
Definitely it will, especially at the affordable levels, anything below 1.5 million. We've got people who are trying to buy houses from that end. Remember, those are not the people who see houses as an investment, it's their primary residence. So whether you like it or not, no matter how difficult the financial or economic conditions are, Arabella, you still need a roof over your head.
Yeah, we certainly do. Very quickly, Metropolitan Holdings coming out with their earnings, so MMI. Quite interesting on that front. The financial counters have continued to go higher today. How much or what do you make of those figures?
I mean, it's expected. I mean, we know difficult times. People have increased the withdrawals or the lapses of policies. We've seen that they had to make more expenses when it comes to claims going forward. We know that the investment environment has been not good for them. The returns were low, and also the volumes when it comes to sales. So I think all those things have already been baked into most asset prices. And we know the Reserve Bank did indicate at some point, recommending that, please, guys, try to preserve cash before you start paying out dividends.
Yeah. All right. Makwe, appreciate the time. Thank you so much for joining us then this afternoon. Makwe Masilela is from Makwe Fund Managers, as we try to gather some sort of knowledge then with regards to this market, which certainly is going in different directions as well. We'll be back then right after the short break.